Welcome back, investors, to Ticker Time News. I'm Adam, and we are here for another market close live stream. Well, there was a lot of mixture in the markets today. There was some pullbacks in a lot of companies, and a pullback in the S&P 500, the NASDAQ, the Dow Jones did gain a little bit and came really close to a record high. Gold was up a bit today. Crude oil almost $84 a barrel. And of course, Bitcoin is waning a bit. And I think that has something to do with media attention that it got this week, pushing the price up with the launch of the Bitcoin Futures Etf. So we've got a lot to talk about today. But remember, the most important thing about this live stream is answering your questions. So if you have a ticker symbol that you would like us to talk about, leave the ticker symbol and your question in the comments, and we will get right into it. Although I do have quite a bit to go over today, I do not mind, and I absolutely want to stop and talk about what's on your mind. So just leave that ticker symbol and question in the comments, and we'll go over it. Let's see here. Welcome back. I'm glad you're with me again today. Smile Direct Club, do you think $5.32 will hold, or is it going that other way? I'm on the fence as to whether it's broken the setup. So let's pull it up. Smile Direct Club is ticker symbol S. Let me get my cursor right there. Okay, on the right screen. Ticker symbol SDC for Smile Direct Club. I always want to call it, for some reason, Smile Club Direct. I always want to say it backwards. All right, this is the one-day chart. Let's go into a 1 hour chart so we can get a better look here at what's going on. There was a setup with it. Let's see here. Okay. Now, looking at the lines that I have drawn here, you want to pay attention to the two yellow orangish lines. And if you look at it, the low that it hit today, it did not quite come down and touch this yellow line here, or orange line, I guess I should call it. So I would say the setup is still intact. As long as it doesn't break below this yellow line. So as we move forward in time, we're looking at probably a low somewhere around $5.25, maybe to $5.30. If it breaks that barrier, then I would say the setup is broken. Until then, I would say the setup is still intact, because this is what we'll see in this symmetrical triangle. We can see the price run up, and let me just give you a measurement for what type of price swings we could see. This last one, from bottom all the way to the top here, was a 39% swing to the upside. So we're not going to see that big of a swing as it comes down, but that's the type of swings we could see. So if we measure from this bottom right here at right at $5.30, and if we go up a few days out to the top of the yellow line, which a lot of times it doesn't make it all the way to the tops and bottoms, it can come up short like it did in the last little rally it had. But this is a 25% run up that it could have. But again, we do have also a longer term trend line that could cause the nexus point for where the stock could break out, either to the upside or to the downside. We do have that line approaching, cutting into this yellow line here. So maybe only up to an 18% swing if it goes fully up. So that's what I would look for in Smile Direct Club. So the setup is still there. The opportunity is still there. We want to watch on Monday what happens. Does it open and go lower? And if it does it break below $5.30, $5.25, absolute lowest. That's what I would be watching on Monday. If it's green and it rallies up, everything is still okay. So that's what I would say for Smile Direct Club as far as the setup that we have here for them. Let me go to a 1-day view real quick just to look at the overall trend pattern that it's in. So we can see this is definitely defined. We have this overall trend with the two purple lines going down, and that would be from January, the end of January, down to the middle of August, and then we hit and we changed the pattern. The pattern has changed technically, so the technical structure of it has changed, but it's still intact. Bitcoin. If Bitcoin gets to 54K, I'm buying more. Yes, that would be excellent. And let's look at Bitcoin, BTC USD. And I use Coinbase on TradingView for their price action here. So Bitcoin right now is at $60,833. And let me just zoom in. Again, this is a day chart looking at the overall trends for Bitcoin. You can see this price action line right here that I have marked off. It's at $60,100. It looks like Bitcoin came down and broke that just a little bit. Looks like Bitcoin hit a low today of 60,000 even. So this could be a good area of support. There is a possibility, I think, though, for Bitcoin to go as low as 59,000, maybe dip into the 58,000 and some change and find support there. But these price action support and resistance lines, which are these blue lines that go across the screen, they're not very strong, and that's why Bitcoin was able to break through them on its way up. It's the black trend lines. Those are the tougher ones as far as resistance is concerned, but they're also the stronger ones for support. And that's why you can kind of see the candle sitting on that trend line, even though the wick broke below it, price did rebound and bounce back above that trend line. So I would definitely be a buyer at 54,000. I actually bought some today in the 60,500 range just to add to my position because I do believe Bitcoin will have a year-end rally. I can totally see it going to 75,000, like I've said almost every day. But the 100K, I'm not quite too sure about that one. If it does, that would be wonderful and excellent, but we'll have to wait and see. Now that we're back at all-time highs this week, it does seem like, 100K could be realistic, but I don't want to go out that far. 75K is kind of where I've got my mark. So we'll see how that goes. I'm happy to start trimming around $6, $6.25. I'll keep a sharp eye on it Monday morning. Thanks. You are very welcome. That's what we're here for, to have a conversation and share our thoughts and opinions and knowledge so we can all learn and grow together. Okay. So let's just... let me run through a couple things. If you have questions, pop them in, and I'll stop and go over them. There are a couple of stocks that I wanted to point out today. There were some earnings that I want to point out today, but it's Friday. It's the end of the week. If we want to take a look at how sectors did, there's this great little website. It's csimarket.com. And you can find all kinds of information. It's a free website, and it's just packed full of information. Again, that's csimarket.com. But the best performing sectors this week, number 1 was financial, number 2 was transportation, and number 3 was retail. And that probably has mostly earnings backing retail being up this week. And the 3 that I would say were the worst performing We don't want the ads. Get out of here, ad. Come on. There we go. Okay, the worst performing sectors this week: conglomerates, consumer, non-cyclical, and services. Services, I can totally see taking a hit with the labor market that we have right now. Okay, going back to the market, let me pull up the S&P 500. And on TradingView, I use ticker symbol SPX for the S&P 500, just to take a look at that. This is the daily chart. You can see it barely moved today. There's hardly a candle for today. It is a red candle, but it is very small. The price action today was pretty tight, between 45.24 to 45.59. So it stayed really close. So this doesn't signal that the what I would call a blow off top, a melt up of the S&P 500 being over. I think there's still a little room for it to go. But the markets today were very mixed. I talked about which ones were up and down. So let me just talk about something else, like what we're going to talk about today. The couple of stocks that I did want to mention are Snap. It did horrible. Chipotle, it did wonderful. Beyond Meat, not so good. Intel broke its winning streak. Tesla, and of course the Trump stock, which is on everybody's mind. It performed well, but like I was thinking, it sold off quick right at the close in after hours today. So we'll plug that in and take a look too. I also want to talk about catalyst for next week. What specific stocks should we be looking at? So those are the things that I want to go over. Again, if you have a question, go ahead and put it in the comments and we'll go over it. So Wall Street reversed some of its gains today to trade a little bit lower after the Dow Jones and the S&P reached record levels, as the Fed's Jay Powell, he acknowledged inflation is well above the target, duh, and reiterated it is time to begin taper, but it is premature to raise rates. So the Fed is thinking that it's time to taper, but we can't have interest rates go up too quickly. So they kind of seem like they're on the fence and they're not sure what to do. That uncertainty obviously can affect the markets, and you saw there was quite a bit of green in the morning and then more red in the afternoon, and that's kind of where things were left off at the end of the day. Still, I think investors remain upbeat on earnings report, as like I said yesterday, 84% of the companies in the S&P 500 have so far reported results in their Q3 on the upside, and that has been good. We had earnings from Honeywell. They beat forecast, but the company cut its 2021 guidance, while American Express, well, they topped estimates on both earnings and revenue. At the same time, Snap, oh my goodness, it sunk over 25% after the social media company said it expects growth to slow following new guidelines of Apple's iOS privacy that will impact company advertisements. We're going to talk a little bit about that too, because it's going to affect more than just Snap. And I think we saw it in a lot of these social stocks today being down. Also, Intel, it plunged maybe about 12%. I'll put the ticker symbol in just a moment. But the company reported weaker than expected sales as computer shipments were impacted by components shortages. Now, like I said yesterday, you can look among areas with relative strength like energy, lithium, uranium, transports, electric vehicles, crypto, blockchain, cloud computing, software, and solar. for investing opportunities. All right, let's look at Snap. It's almost embarrassing to look at this company. The ticker symbol is its name, SNAP, Snap. And on the daily chart, a humongous hole as it gapped down. Oh, it finished today down 26.59% to $55.14. That was a big drop. Wow. Wow. All right. So it snapped significantly lower today, with shares falling by 26.59%. This is its biggest one-day drop ever for the company. Now, it missed its Q3 revenue and guided Q4 revenue below estimates. The culprit of this major downturn in Snap, Apple, and Apple's decision to implement App Tracking Transparency, or ATT, changes in its operating system near the end of the previous quarter, leading many iPhone users to opt out of allowing tracking by advertisers. Now, this is good for consumers to have the option to opt out of the tracking, but it's not going to be so good for companies that rely on third-party data like Snap. Now, I do have a couple suggestions on where you could find good deals on companies that won't be affected by this. Now, Snap generates nearly all of its revenue through advertisements on its platform. That's why it took such a big hit. By users opting out, advertisers can no longer retrieve insights regarding the impact of their ad campaigns, such as time being viewed on an ad, for example, or what actions were taken during an ad, like clicking on the ad to go to a landing page or downloading an app, leading to fewer dollars for Snap. Despite Apple having already rolled out ATT back in late June, Snap still guided its Q3 revenues above estimates. I don't think the company thought these ATT would have such a big impact on the company, because the company was very optimistic when Apple announced its changes. But here we are today, and it's impacted it tremendously. Now, during Snap's Q2 earnings call in late July, the company stated that it saw higher opt-in rates than its peers and attributed it to the trust the company built. That's a key line right there. The trust the company built. There's another social company that said the exact same thing. They think they're building trust, but are they really? Or are users just using these companies and not really thinking about trust with the company? Therefore, investors are rather shaken by Snap's advertising business being disrupted more than it initially anticipated. Again, Snap, I think, had blinders on when it came to Apple's decision and what it thought would happen. More people opted out to not be tracked, and that's what affected Snap. Also, Twitter, Facebook, anyone who uses third-party data like these social companies. So ATT, it caused a significant disruption in Snap's business and sent many other companies with heavy ad exposure lower. Like I said, Facebook, Twitter, they all are down. Now, not all of them. Given that many of these companies shared similar optimistic sentiments as Snap around the time Apple implemented ATT, I think many of these companies may acknowledge similar issues as they report earnings in the coming weeks, a couple of them next week. For example, let's look at Twitter, for example. Their ticker symbol, TWTR. They closed down 4.8% lower today. Now, it's not too bad for Twitter. It didn't affect them as bad, but they're now below their or right on their 50-day moving average, their 200-day moving average. So it's a very critical point for Twitter if you're following this company and investing in it. Now, on Twitter's, it was 2Q earnings that was in July for Twitter. And they noted that it was pleased with opt-in rates and expected the trust it built with its users to drive those rates higher. I think they're mistaken, just like Snap was. There's more opt-outs than there are opting ins. Now, companies that won't be affected as bad. Roku, for example, ticker symbol ROKU, or Roku, I should say. Now, it's an expensive stock at $321, but they were also down 3.5%. And if you look at the chart, their 50-day moving average, they actually gapped down today below it and caught their 21-day moving average as support. So next week, can it break above its 50-day moving average, or is this downtrend recently that it's been in since, well, not recently, July, can it reverse it, or is it going to bump heads with its 50-day moving average and keep it moving lower? That's what I would watch for Roku. Now, why am I bringing up Roku when we're talking about Snap and Twitter and Facebook? They're more socially engineered companies than Roku is, but Roku relies on advertising. So Roku does have an advantage over companies like Snap and Twitter in that it boasts a more direct consumer relationship. My playbook, a way around to invest in companies that are affected by Apple's ATT, is with companies that have first user data. That's what I like to call companies like Roku, companies like Walmart, companies like Amazon. Even though a few of those, Amazon, it has a little bit of advertising exposure for third parties. But think of Walmart, for example. It's collecting massive amounts of data from its customers. Therefore, it's not reliant on third-party suppliers of that information. They're not They're not relying on Apple for that information. They have that information themselves. They're a first user data type of company. That's the type of companies that can get around what Apple is doing. Now, like I said, they've got the receipts. They can back it up. They know what their customers are buying. Now, a company like Google, for example, they also have first user data, but that could change if Google moves Android in the same direction as Apple. So that's something I would be curious of. Are they going to do the same thing? Now, back to Snap specifically, I think it will face uncertainty as it works with advertisers to try to find the best solution of the ATT-related headwinds, such as a maybe wait and see attitude on some of these social stocks until we can understand how there can be a better relationship or workaround with Apple. So we'll just have to wait and see. So I wouldn't be diving into buying any of these companies that are reliant on third-party users for information for advertising, especially when the company is so advertising heavy. Okay, moving on from this. That was a bit choppy. I apologize for that. Let's talk about Chipotle. I love their food. Ticker symbol CMG. I actually use DoorDash quite frequently to get Chipotle. So two companies that I do like, DoorDash and Chipotle. But they were down 2.8% today, a wildly expensive stock. They closed at $1,792.21. They need to do a stock split, seriously. But let's talk about Chipotle. They are rolling a bit lower today despite reporting strong Q3 results. In terms of headline numbers, Chipotle reported a huge 70 cents beat, not quite the 97 cents generated in Q2, but still quite robust. Revenue was in line. Q3 comps came in at 15.1%, versus prior guidance for growth in the low to mid double digits range. After the company reported massive Q2 comps of 31.2%, which were way above prior guidance, perhaps the Q3 results may have underwhelmed investors looking for more upside. And that's why the stock, even though it reported a great earnings, were down 2.8%. They just could not beat those Q2 results, but they were still good results. My playbook, this is another great quarter for Chipotle. I think the weakness in the stock's price today is related to Q3 comps maybe not being as impressive as Q2 comps, which led to a breakout in the stock in July. And we can see that here on the chart. Their earnings right here, they beat by 14%, but there's this massive green volume candle. It is huge, sticking up there, and then a pretty big gap up right here. You can see the hole where my mouse is moving for Chipotle. That's what happened after the massive Q2 results, and then Q3, not as impressive, but they were still good. So this pullback is healthy for Chipotle. Also, restaurant level margins are expected to dip a bit in Q4, and that's likely having an impact too. The stock had been confined to a 1,300 to 1,600 range before its Q2 earnings report. So just something to keep in mind there. I know it's an expensive stock, but it's a strong company and they're doing a lot of good things. I actually think investors came into the Q3 report with expectations that were perhaps too high. Now, another company that I am actually kind of bearish on, but it's a popular company. That's Beyond Meat, ticker symbol BYND. Wait till you see this. They were down 11.8% today. Big gap down, big hole. They're way below their moving averages now. They've been in a downtrend since July, and this does not help them. It's almost like their 21-day moving average has acted as resistance, keeping the stock down. Now, I am bearish on this company. I'm not a big believer in what they're trying to pull off. Good thoughts, I guess, but I don't think that they can pull off what they want to. So Beyond Meat actually hit a 52-week low today, and that was set at $91.55 a share. So what exactly happened to Beyond Meat? Well, Beyond Meat pre-announced another terrible quarter. They lowered its Q3 revenue guidance to $106 million versus prior guidance of $120 to $140 million. Management blamed a number of factors, including a macro, the Delta variant, soft retail orders, manufacturing issues, delays in distribution expansion, and labor shortages. It seemed like they blamed everything except for what they were doing. They also said certain operational challenges due to severe weather led to unfulfilled orders. Now, I think this stock is highly overvalued. It's got a market cap of $6 billion, and I do not personally believe the company is worth $6 billion. If you believe otherwise, let me know in the comments, because I would be interesting to hear your thoughts if you think Beyond Meat has a compelling story. Next one, I want to talk about a pretty big company, Intel, ticker symbol INTC. All right. This is again a daily view, and they had a big gap down. They were down 11.68%. It's hard to see the gap down where the candle is because the volume was so much higher. Maybe if I do this, there we go. There's the candle all the way down here. The volume sell candle is humongous. Big gap down for them today. And they've been trading down since April of this year. They had another big gap down Q1 of this year. And then they were kind of trading flat and then gap down today. So Intel not looking good. Let's see. Hold on. Let me gather my thoughts real quick. Q3. Okay. Intel. Their Q3 results and guidance, they released it last night. This is the first time since 2018 that Intel missed the street's estimates. The results were a bit unusual because Intel reported a huge EPS, or earnings per share, beat for Q3 that was paired with light revenue. So how could that be? Meanwhile, they also talked about Q4 guidance, and that was the complete opposite, featuring downsided EPS guidance with roughly inline revenue. Also, Intel provided some long-term margin guidance that I think troubled investors and added to one of the reasons why it was down so much today. Demand for Intel, that's not the problem, because there are component shortages. The limited supply is going into higher end PCs, maybe even crypto mining type of rigs, big dollar, big item computers, I would say. That is the reason for the big beat on EPS. That's why EPS was so high, even though revs were light. Since the revenue was down, but the earnings per share was up, their products are going into items that are more expensive, that they make more of a profit on. That's how they can be so lopsided when they're flat on earnings, on their revenue, I should say, but their earnings per share is up so much higher. That's the reason why. The lower margin guidance is really something to think about and explains why Q4 EPS guidance came in light, even as revenue guidance was in line or flat. Part of the concern is also the duration of the lowered guidance. They said it may take 2 to 3 years, and that's a long time when we're looking at stocks. A lot of investors can't look past 2 or 3 weeks, maybe 2 or 3 days. Looking out 2 or 3 years, like long-term investors do, that's a really long time, especially for a company. So I'm a bit surprised that earlier this year, Intel decided to double down on being a chip manufacturer. I thought that pursuing a fabless focused route and farming out production to third parties could have been a more promising path. I hope that the short-term pain in Intel is worth the long-term gain. Now, let's go back to Bitcoin for just a moment, because there was a new Bitcoin Futures ETF launched today. Its ticker symbol is BTF. And this is the Valkyrie Bitcoin Strategy ETF. I know in the daily chart, it doesn't look like much here. Let me go to a 1 hour chart just so we can see something with the candlesticks. Very spotty, very, very spotty. Anyways, let's get back to this. So the Valkyrie Bitcoin Strategy ETF, it went public today and it closed here at $24.30 a share. Excuse me for one quick moment. Sorry about that. Thank you. I do apologize. Okay. The Valkyrie Bitcoin Strategy ETF. This is another Bitcoin futures ETF and not a spot Bitcoin ETF, meaning like the ProShares Bitcoin ETF strategy or the ProShares Bitcoin Strategy ETF, which their ticker symbol is BITO, and they launched earlier this week. You can see them. They're up to $39.51. They were down 3.2% today. This launched earlier this week, and then the Valkyrie launching today. These Bitcoin future contracts, or I should say, what they hold are Bitcoin future contracts. And it does not actually mean that they're holding any Bitcoin. They actually hold 0 Bitcoin. Because these are futures-based strategies or futures-based contracts that they are doing, it's an indirect way to hold Bitcoin. I have a video out that can explain this in great detail if you're interested in that. But the Bitcoin futures, it's betting on a price, a future price of what Bitcoin may be. So they're just holding pieces of paper. They're not actually holding the digital asset at all by any means. And personally, I'm not in favor of these Bitcoin future ETFs. Since they're not holding actual Bitcoin, one-for-one Bitcoin, meaning you invest $1 in them and they should in turn hold $1 worth of Bitcoin. That ETF I would be more excited in. Now, the launch of these Bitcoin futures ETFs did lead to Bitcoin spiking earlier this week because of the media attention. So if we go look at Bitcoin here, let me get that pulled up real quick. If we hop back here and look at Bitcoin, now this is an hourly chart. Let me squeeze it up here a little bit. So here we are today. We're right at this trend line. We're at 60,686 now. If we go back earlier in the week, let's see, the week began on the 18th. So if we go back to the 18th, which is right here, there's actually, for some reason, I've got this orange line right here. Let me see if I can open this up a little. No, anyways, okay. All right, so if we go back to earlier in the week, right here's the beginning of the week, right? We had 2 Bitcoin futures ETFs launched. One launched here at the beginning of the week, and then one launched over here at the end of the week. Now, all week long on mainstream finance media outlets, whether that's digital or TV, they were talking about Bitcoin and the Bitcoin ETFs. That gave Bitcoin more mainstream attention. That has led to Bitcoin reaching a new all-time high. That helped Bitcoin rise. Now you see Bitcoin declining. It's below all of its moving averages, 21-day, 50-day, and 200-day moving average. But that's okay. This is a healthy pullback. When you see something run up sky high, it usually falls right back down to the ground. So you want to see a gradual up and to the right move on the charts, and then healthy pullbacks every once in a while, so there can be some consolidation going on. Bitcoin right now, I believe, is shifting into a more consolidating pattern, maybe a low of 58,000 and some change, but most likely in the 59,000, 60,000. That's what I think for Bitcoin right now. And that's why I think Bitcoin ran up, new all-time high, and then pulled back at the end of the week, all because of the media exposure. If you think differently, that's okay. Let me know in the comments what you think. Why did Bitcoin run up and pull back down? Does that make sense? Okay, now on Bitcoin, I'm going to go to the 1-day chart instead of the hourly chart. Open it up here a little bit. All right. We talked about this earlier. It's come down some since we began the live stream and talking about it. It's now down to 60,200. That candle wick that came down to the 60,100 level, the candle itself is now coming down and approaching that level. And that's okay. It probably won't act as very strong support. It could probably sink down even lower. The biggest thing that I would watch for with Bitcoin is the trend lines, the black ones that I have drawn here, and the 50-day moving average, which is right here at 50,497. I do not think Bitcoin is going that low. Like I said already, 58,000 and some change, 59,000, I think would be okay. I strongly believe in the year-end $75,000 rally for Bitcoin. So that's still intact. My mind has not changed. My investment thesis strategy is still the same for Bitcoin, nibbling up little bits as it moves down on red days, and then watching it run on the green days. Okay, let's talk about another company real quick, and that's Tesla. Ticker symbol TSLA. Now, Tesla, they had some magic today, some real magic. They were up 1.75%. That doesn't sound like a lot, but Tesla, they hit a new all-time high today of $910, even a share. $910.00. Perfectly balanced, as all things should. But $910 was a new all-time high for Tesla today. Tesla is now hanging right here around its hold on, let me go into the 1 hour. Get a better view of this. Okay. Tesla right now, it's using its 21-day moving average as a bit of a support line going up here. And its 50-day moving average, of course, is following right along with it. I expect there to be some kind of a pullback in Tesla soon. It may be Monday, it may not. It may be Wednesday of next week, maybe Thursday. I don't know that yet. I don't know the exact day, but I suspect we will have a pullback, and I would watch the 50-day moving average as the real support line. Now, I do have a price support right here of $885. It was a little bit low for where support was for Tesla right here in this bracket. And that support level was right around $888. Oh, these prices keep coming out nice and even and neat. Isn't that something? But so somewhere between there, not $885, $888 may be a good support level, but it's not super strong. The 50-day moving average will be the biggest test, and that could be as low as $875, give or take a few dollars. So that's where I could see Tesla maybe pulling back to. Okay. What do you think about Tesla? Is that a company that that you like? Do you invest in Tesla? Let me know. I would definitely like to talk about it. Okay, moving on from that, we have another company to talk about. It's one that gets people riled up, I guess I could say. But that is the good old, is it DWAC, Digital World Acquisition, or what some are calling the Trump stock, what some are calling the Truth Social stock, or some people are just calling a SPAC stock. Anyway, a lot of people are talking about it. So why has the price been swinging so dramatically? Well, looking at this was a SPAC, so it came in at $10, all right? People who thought that this company could go find a great company to invest in, they would invest $10 into the company per share that they purchased. There's something called a PIPE that allows bigger institutional investors typically to come in and buy a big chunk of shares at $10 a share. That's the price range it's usually in, right at $10. Now, if we remember Lucid Motors, they actually had their PIPE investors in at $15 a share. That was a very unique situation. So here we are, $10 a share. Now, this thing yesterday ran up 350, 360% from that $10. It got as high as, let's see, what is this? 51.90 yesterday. After hours last night, the thing shot up another 20, 30 some percent. And today it got as high as $175. Now it's sitting at $78. This thing did exactly what I expected it to do. It shot up in price and came right back down. I knew that today at closing, I should have probably said it clear yesterday in yesterday's live stream, but closing today, every day trader, swing trader, they would be exiting their positions because they would not want to hold this stock over the weekend. That's why it's down 16.7% in after hours. It was up a nice 107% for the day. After hours, different story. So it's sitting at 78.50. This thing could come all the way back down to 20 bucks, 25 bucks, 15 bucks. I don't know where it's going to eventually land, but this stock has got a couple of things mixed into it. It has got people who are obviously Trump supporters. They're in it. It has people who do not like the, I guess I could say, censorship of big tech. They're in this just to say a big, blank you. Then we have people who are not Trump fans, not really Trump supporters, but want something like this to succeed. They're looking for an alternative to Facebook, to Twitter. And then you have people who are totally against Trump, leaving this thing alone. Because last I checked, you can't short this stock, or this SPAC, I should say, just yet. So without the shorting pressure, there's no balance that can be had here. It's just all pressure on the buyers. It's going to go up. there's no sellers that can come in and short it to help bring the price down. So there's no stability in this stock. If you're going to trade it, you get in, you make your profit, you get out. That quick. Set stop losses, trailing stop losses. You could lose a ton of money by investing in this SPAC. So be very careful. All right. There's no telling what could happen on Monday. This thing could drop down to $10. I don't think it would go that low, but it could in theory. It could also run up another 300% on Monday. We don't know. So please be careful if you're investing in this SPAC. Okay. Next up on my notes here, catalyst for next week. And I want to turn to Seeking Alpha. They always on Friday put out a great kind of guide or calendar for what to watch next week. Now, their headline for this, Catalyst Watch for next week, Tech Giants Report, Eyes on Digital World Acquisition. We were just talking about that. And events for Datadog, Facebook, and HPE. So if we look here, Monday, October 25th, a couple of notes that stick out here. Recent short interest jumps on Beyond Meat and Hyliion Holdings could also lead to share price swings for those two companies. Also, investments generating strong interest in Reddit's Wall Street bets include ProShares Bitcoin Strategy ETF and Coinbase, while Sundial Growers is the biggest riser in StockTwits interactions. Digital World Acquisition, which is that what we just looked at, ticker symbol DWAC, DWAC, some people are saying, is also likely to see more large swings amid the rampant speculation on which direction the media company will go. So there's some key things to start off Monday. Let's see here. What else is sticking out? Okay. IPO lockup periods expire on FTC Solar, ticker symbol FTCI. Let's see. What else is sticking out here? Okay, let's move on to Tuesday, and this is October 26th. Let's see if anything stands out for Tuesday. Tuesday all day. A FDA advisory committee meeting will analyze data on Pfizer's ticker symbol PFE vaccine for children between ages 5 and 11. Documents released in advance of the meeting show the Pfizer and BioNTech vaccine is more than 90% effective for the age group. Okay. All day on Tuesday. Earnings reports. Let's see here. We've got Marine Max reporting. Their ticker symbol is HZO. I'm a big fan of Marine Max and the boating industry as whole. So if we just go look at Marine Max real quick, ticker symbol HZO, and take a peek at what they're doing here. All right. This is a company, they've been up as high as $70 this year. They've been in a downtrend lately. Let's go change this to a one-day chart. Here we go. Now we got our lines. Okay, they've been trading flat sideways just recently here since maybe the end of last week, middle of last week. They started trading below their 50-day moving average. They had a green day. They hit their 50-day moving average. It acted as resistance, and they sunk lower off of that. right now, they don't have any support until they can get back down here to maybe $44 to $45 range. They're sitting at $46 right now. I'm expecting good things in terms of earnings for them next week. I'm bullish on them. You can see that since the past 4 quarters, they have beat, and they've beat pretty well. They are estimated at $1.17 EPS, or earnings per share, and it comes out in 4 days. That's Tuesday of next week. You can see their profit margin has been taking off and rocking for them over the past few years. So that's a company I would put on your radar. MarineMax, ticker symbol HZO. They're selling a lot of boats, a whole lot of boats. All right, let's see what else do we have here. Shutterstock also has earnings on Tuesday. Options trading on UPS, ticker symbol UPS, also implies a bigger earnings move than typical, with a 5% swing expected. So if you're in UPS, ticker symbol UPS, so yeah, look at that. If you're expecting good earnings from them, then they would probably go up to this resistance line right here of about $214 to $215 per share. They were up here before. They gapped down on not so good earnings last quarter, but you can see this rise that they've been in over the past several days. Earnings are looking good. So if we take where they are right now and measure to that resistance line, they were looking at 5%. Let's see, I've got it at 5.23%. So that's really close to where I've got UPS set at right now. So that could be a nice 5% gain if earnings come out as good as people expect. Okay, what else do we have? Also on Tuesday, Samsung holds its SDC 21 developer conference to share its latest updates in software, services, and platforms. The event was not held last year, but made news in 2019 with a partnership with IBM, and that partnership was announced at that time in 2019. So that could be a nice catalyst for Samsung, if you can get into it, of course, because it's not tradable. Okay, let's see here. Wednesday, October 27th, all day, Intel, ticker symbol INTC, which we talked about. They broke their winning streak on beating estimates this past quarter. They hold the first of its new Intel ON series event. The new technical conference will focus on the company's latest technologies to deliver AI, 5G, edge, cloud connectivity, and PC solutions with speed and real-world scale. So that'll be interesting. That could possibly tick their stock up a few points. Let's see, what do we have next? All day on Wednesday, 3 SPAC deals go to a vote during the day. We've got Green Rose Acquisition Corp, not tradable in the US, but they're meaning to combine with 4 established plant-touching cannabis firms to create a major multi-state operation with big growth potential and cash flow. Mountain Crest Acquisition Corporation 2, ticker symbol MCAD. They're voting on a SPAC deal with Better Therapeutics. which is described as a prescription digital therapeutics company developing a novel form of cognitive behavior therapy to address the root causes of cardiorhythmobolic disease. Sorry, I mispronounced that. Also on the calendar, Spartan Acquisition, ticker symbol TMTS. Shareholders meet to vote on the SPAC deal with 3D GPS upstart Next Nav. Okay. We got IPOs on Wednesday. We've got Rent the Runway. That's been a very popular one. Their ticker symbol will be RENT, R-E-N-T. What else do we have? Purple Innovation, that's the Purple Mattresses, also on Wednesday. Their ticker symbol is PRPL. They'll be at a conference along with Uber, ticker symbol UBER, and Stone Company, ticker STNE. Okay, so their stocks could tick up as well. Then we have another one. The launch window opens for Astra Space's, ticker symbol ASTR, commercial orbit mission on behalf of the United States Space Force. Shares of Astra Space have rallied in the past after successful launches. Okay, that's another good one. If their launch is successful, that stock could also tick up. 9:30 a.m. on Wednesday, Datadog, ticker symbol DDOG, holds a virtual investor meeting as part of its annual user conference. Last year, shares of Datadog rose 9% in the week following the conference and were up 45% in the 10 weeks following the conference after the product's reveals led to analyst upgrades. I'd expect the same thing. Datadog is a company, I like them. Not invested in them currently, but they're a nice company. They're coming along. They're growing. I could definitely see new products increasing their stock, so that's a good one. Let's see. At 1 p.m. on Wednesday, October 27th, the National Retail Federation posts its holiday sales forecast and holds a conference call to discuss current consumer spending and shopping trends. The closely watched NRF forecast arrivals several weeks before major earnings reports from Target, Best Buy, and Walmart. So that'll be an interesting report to go over. Hopefully we can have some news to share on Wednesday about that. Then we move to Thursday, October 28th. Let's see. Anything exciting happening on Thursday? Here's an interesting SPAC deal. Shareholders with Trident Acquisitions Corporation, ticker symbol TDAC, meet to approve the business combination with Lottery.com in a SPAC deal. Lottery.com works with more than 800 lottery games across 40 countries. Short interest on TDAC is elevated ahead of the potential SPAC debut. Interesting. All day on Thursday, Facebook, ticker symbol FB, holds its annual Connect conference, which is expected to forecast a focus on the tech giant's rebranding efforts that include a new name. The name out there I like the most is Horizon. I also saw one changing their name to Metaverse specifically. I don't know if they could do that, but they're definitely going towards the Metaverse direction. The rebrand is likely to separate the Facebook app from other products like Instagram, WhatsApp, and Oculus. Mark Zuckerberg has been talking about Facebook transitioning to a metaverse company of interest. Facebook is a top holding in the Roundhill Ball Metaverse ETF, ticker symbol META. In my metaverse video, I specifically talk about that ETF, Roundhill Ball Metaverse ETF. I am invested in that ETF, ticker symbol META, Meta. I'm excited for the metaverse, and I'm looking for companies that focus solely on the metaverse for investing opportunities. I think it has the opportunity of a lifetime, much like, investing in Amazon or Google or Microsoft at their earliest days. I think this is where the metaverse is. It's at the earliest days. Facebook announced that they're going to hire 10,000 people specifically for building out the metaverse. It's got a lot of potential. Let's see here. 7 a.m. on Thursday, Altria Group, ticker symbol MO. They have tobacco brands, smoking. They're also getting into marijuana. Holds its earnings call. The tobacco stock is on Bank of America's short list of stocks to set up well for a positive earnings surprise. The earnings call could include a question on plans for the company's 10% stake in Anheuser-Busch, which that ticker symbol is BUD, B-U-D, with the lockup period expired. So that'll be interesting to see. You've got beer and cigarettes there together. 3:30 p.m. We've got HP. They're holding a virtual securities analyst meeting. Shares of their ticker symbol is HPE. Their shares rallied more than 3% at the same event last year after the company issued a strong guidance upgrade. Let's just peek in on HPE. HPE. Again, we got a daily chart here. So nice rally in 2020. They peaked here around May of 21. They've had a couple of dips. One bounced off the 200-day moving average. One sunk well below it, and that was right after their last earnings. Let's see what let me measure how far they've gone up here currently. From that last dip, they are sitting at 18% up, 18% rally there. So how much more could they go? Well, if you look at this peak that they had back in May, that was at 1675. So if we just say they match that, where they are now to 1675, that's a 9% possible gain there. I don't think they'll reach that because they do have earnings in 39 days. But it could be an interesting play and setup to watch. Let's see, 5:30 on Thursday, 5:30 p.m. and these are all Eastern time. Amazon, ticker symbol AMZN, holds its earnings call, which could be of interest to a number of suppliers, with the company sometimes calling out hot categories and products. Suppliers that generate more than 10% of their revenue from Amazon and trade with a high correlation to it in the week after earnings include Summer Infant, ticker symbol SUMR, Emerson Radio, ticker symbol MSN, Muscle Farm, ticker symbol, they are not a U.S., not in a U.S. stock exchange. Honest Company, ticker symbol HNST, Layered Superfoods, ticker symbol LSF, and Netgear, ticker symbol NTGR, and Cornet Digital, ticker symbol KRNT. And again, those companies, they're suggesting may have a correlation to how Amazon moves. So just some companies to keep in mind there. Then we get to Friday, and there's not much on Friday at all next week. No, there really nothing on Friday there. MoneyGram International has earnings. Their ticker symbol is MGI, and that's about it. So that's everything that is of interest for next week as far as catalysts are concerned. And that about wraps up what I wanted to talk about today. That's all the everything on my checklist here. Again, if you do have a question, we can go over it. It is not too late to do so. I know we've been at this here now for 1 hour and 11 minutes, but that's okay. If we just hop over here, I'm going to look at some of the top winners. If you want to ask any questions, you can, always. Of course, we've got the Trump stock up 107%, obviously a big winner today. Dutch Bros was up big today, 13.6%. Let's see, we've got SVB Financial, which is the Silicon Valley Bank. Oh, it just slipped my mind. They were up 6.8. Let's see. GitLab was up 6.5. eBay was up. That's cool. Renewable Energy, American Express, 23andMe. 23andMe had some news today. I believe they were looking to go after maybe the health and fitness area or nutrients area. Let me just get my facts straight here. They did something today. Okay, here we go. 23andMe extends into telehealth care with Lemonade purchase. All right. Let's see here. What lemonade are they talking about? Oh, Lemonade. Got it. I've seen their Lemonade commercials. It's lemonade separate from the lemonade that we think of with insurance. Lemonade Insurance, that's a company I like, I invest in. This company, I have seen commercials on TV before, but I don't even know if they're a public company or not. I have not looked into them. But 23andMe, which is a giant in DNA testing, has agreed to purchase telehealth startup and drug delivery service Lemonade Health in a bid to make its personalized genetics approach part of patients' primary care. That's a really good fit and match. That's a really good direction for 23andMe. 23andMe will pay $400 million for Lemonade, with 25% of the purchase price in cash and the rest in stock, according to a statement Friday. The acquisition is expected to close by the end of the year. Shares of 23andMe have fallen 28% since debuting June 17th. They were down 7.3% at 10:22 a.m. in New York. Okay. Now, that's a really good direction for 23andMe to go in. I mean, they're giving you your DNA information. Why not offer healthcare and your medicine delivery right with it? Some of you may know by watching a video I did a while ago about Meet Kevin. But in that video, I shared that I actually have a a disability. It's called porphyria, and those DNA testing, that's how they were able to finally confirm what I had, was through a DNA test. So it was pretty cool, pretty neat. It definitely gives you a definitive, this is exactly what the problem is. Because if you don't have, you know, certain things in certain areas with your DNA, I won't go into technicals on that, but yeah, it was interesting. I'm sure most of you know this this headpiece here behind me. I actually am in a wheelchair. I cannot walk because of porphyria, but yeah, I talked a little bit about it in that video. If you ever want to ask questions, don't be afraid to. You can ask me anything. Okay, back to the stocks. We got Kohl's up, so retailers, which we saw when we looked at what did well, and we saw retail segment did well. AutoNation, they were up again today, 3.5%. They had really good earnings. We talked about them yesterday in the live stream. Something interesting that I saw in the news since we've been live, I believe the CEO, I don't want to get this wrong, the best way, let me just search for them. Actually, hold on, let me just see if it's here. There was news that came out about shares being sold, and I want to make sure I have my facts. Oh, where is it? Okay, AutoNation owner sells $25 million worth of shares. I thought that was interesting to note, since they did have good earnings this week and their stock's been up. I missed a big chunk today. Surprise house guest. Oh, cool. I hope that was fun. When will you post so I can rewatch this? As soon as the show is over, I believe this is how YouTube works. As soon as it's over, it's automatically up, and you can rewatch it instantly. I believe as soon as the live stream ends, YouTube actually gives you a button that you can click on that I think it says rewatch or something like that, or watch again, and it'll take you right to the beginning to start over. I also believe you can back up from where we are right now to watch from any particular point. So yeah, the video should be up immediately as soon as I click the end button. So yeah, which I'm wrapping things up right now, unless you have any questions you want to talk about. I covered everything on my notes that I wanted to get out today. So I'll just look at a couple more of these winners here today. So if you have anything that you wanted to ask, you can while I'm here. Otherwise, I'm going to wrap it up here in a few minutes. The VIX spiked today, 2.8%. You know, that's your fear, your worry, your concern, your uncertainty type of index there. Usually when that when the VIX goes up, usually stocks will trade sideways or go down. Let's see, what else do we have here? BJ's, yep, retail, Cheesecake Factory, restaurant, Kroger, grocery store, BJ's, they were up. Let's see. Etsy was up 2.2%. UPS was up 2.1%. And we talked about UPS and how there could be a trade setup for UPS as they go into earnings. Intuit, they were up 2.1%. All right, we're getting down to 2%ers here of being up. Let's look at what was down big today. So the biggest was, oh yeah, Snap. Oh man, poor old Snap. They underestimated the power of people wanting their privacy. Beyond Meat was down, not surprising to me. Intel was down 11.6%. We talked about Intel. Sunworks, so that's solar, it was down 10.8. Fuel cell energy, alternative energy, down 10.1. Trueleaf Medic, that's cannabis, that was down 9.8. Litecoin was down 8.8. Trade Desk was down 8.7. I think Trade Desk got mixed in with the social stocks being down on Snap and the news about Snap. But I don't think Trade Desk will be as affected. Okay, so that's a few here that were down. Oh, AMC was down 6.7 and GameStop down 6.5. So that just follows right around where everything's going with the momentum style stocks. We got Workhorse down 5.8%. They're at $6.29. DraftKings down 5.7. So a lot of growth stocks, momentum stocks down big today. Lordstown Motors was down 5.7. They're at $4.78. Golden Nugget was down. Zynga was down. Pinterest down. Hive down. So a lot of momentum plays there that were down today. All right. Well, if there's no other questions, I will go ahead and wrap this up. I do want to say a big thank you for being here. Thank you for the conversation. I love it. If you are watching the replay of this, you can leave your ticker symbol in the comments and with your question, and we'll go over it live during our next show on Monday afternoon or evening, depending on your time zone. Okay, guys, thank you so very much for watching, and I will see you in the next video.